All right, so today is um, May 17th. Is it May 17th? Yeah, it is. May 17th, 2021. And we finished training some time ago. And today was a very, very, very interesting but pretty good day um, in trading. Um, all right, let me fix this. I'm just going to pause this. All right, so yeah, so we traded the futures today. I was gonna use my real account, but just wanted to get a good sense of how we would trade today. The last time I traded with my real account, I took some very, very bad trades that kind of screwed up the entire day. Even though I saw some good setups, then decided not to do that. I think my confidence has been knocked. All right, so as you can see, these are all my trades today. What I will do is actually show the extended hours, and we'll start off based on how we intended to trade. All right, so where do I start? Okay, so so what I'm going to do is I'm going to go through the different time frames. I'll start from the higher time frame to the lower time frame. So and this is just based on what I have learned from our Brooks. If we start with a daily time frame, we've had a whole series of bull bars and then a huge massive sell-off and then one big rise. And from what I have been told, I mean, we bounced off this main trend line. For what I've been told, we are going sideways, which kind of makes sense because we've kind of been going up quite a bit over the last few days, and we had a huge down and now a huge up, and it looks like now we're in a trading range, and we could be in this range for quite a few days or even a few weeks apparently. So if we look on the weekly chart, based on the last time we were in this range, which was around here, we were in a trading range for 5, yeah, just about 5 weeks. Probably here, yeah, probably about 5, 6 weeks before we broke out, went back into the range, and then we broke out again. So maybe 2 months we've been in that range, and there's a chance we could be in that range again. So what I did today was just try to sort of get a good gauge following Owl's trading chat room. Essentially, Owl talks through the bars as they're forming, and literally just trying to get a good sense of what was happening. So because we had this sell-off over 2 days and then we had this rise over 2 days, today was going to be an exhaustive sideways day. It wasn't going to be a huge bull day, neither was it going to be a huge bear day. So we had a lot of sideways price action. I wasn't ready for that. My own plan today was just following price action and just seeing what would happen. Initially, when I plotted this, I actually had this channel all the way up here, and in fact, I'm just going to do that just for the purpose of this analysis. And I plotted this like this over the weekend. So if we look at, so we go back, I'm going to look at the 5-minute chart and talk about some of the things that I learned over trading the 5-minute and looking at it from Globex. So last night I had initially a demand region here somewhere, which was formed by, I think it was a 30-minute demand zone, which was over here. So if I just basically plot this out right now, we had this. As a result, we had price bounce off that. We had a wedge, so I expected price to rally quite a bit, and of course it did rally all the way to the top. Just take this out, remove drawing. We didn't have this channel until this morning when I noticed this channel forming. So what has happening is price is kind of being in this channel, down where you had up, down, and I don't think this is down, but this is definitely down. up, and this is how we opened. I took a trade in when we were in the market this morning. I took a trade in here because I just kind of figured that if we were going to, we were in this region, which was a demand region at the time. It's not plotted right now, but that demand region was here. Wait, hang on, where was it? All right, so I took my trade from here. So that was not why. Or was it here? Yeah, so the demand region was here. So you can imagine you had, again, the box here. I'm just kind of plot this over here. Right, imagine this is green. So we had a box here. So we look back on this chart. That box was over here. I jumped in here, which is pretty late. Really, the idea, it would have been more ideal to jump in over here and taking this long. Now, what I've noticed is whenever you're trading in this session, it's best you look at the higher time frame, 15 minutes, because of how slow price is moving. It's very, very difficult to get a good idea and good signal, and you can get some really bad fake outs. It's like looking at the 1 minute chart being slowed down. So it makes more sense looking at the 15-minute chart to get a good sense of price action, because the bars actually form the same way the 5-minute chart forms during the day. So based on that, we had a double, in fact a triple top. So this is a range. Then we had a breakout over here, and then we could have taken this short. I didn't know that at the time, but this was obviously what was happening. And then we now had this long here, which is based on a demand region here, which was this demand region, of course, around about there. Didn't really touch it. That took us up, and then it touched it over here. We had a wedge, 2 pushes, 3 pushes down, 1, 2, 3, wedge formation. We could have taken this long over here and gone up here. I think at this point we now know we're definitely in a channel, because we have these 2 points and we have a high. So we can now plot our channels. It's always difficult to trade upwards in a downtrend because you go sideways for quite a bit. This was definitely a good short. Even from here, this could have been taken all the way down here. This formed some sort of supply area, which we marked on the 30-minute chart, and that was what was used for today. Now, I didn't actually take this trade. I didn't even look into taking this trade, and I should have. Just if you're playing supply and demand, it just didn't click that, when price rallied at the beginning and at the open, and we just look at that, we would have that. Like I said, I took a trade up here and got out around about here. Just looking at that over here, that's what actually happened. And at this point, we were up quite a bit, I think. And so it wasn't too difficult. Then now saw this wedge form. We saw price rally, drop. This would have been a good short, but the risk was so high I didn't want to take it short. And really, it could have been a really good short actually, because I think as long as we kept our stop over here, we could have just followed this price, because it was coming from a supply region, which was all the way up here. And now I know that these supply regions are actually good and they work. So this came down here, formed a wedge, went up, we took this long, and then it came back to this supply region, which had formed from this candle over here. And then we had that drop. So it came here, dropped again, which is why we had this over there. Could have taken that short on this signal bar, we didn't. We actually went long because this closed on its high, which wasn't a which was not good. Because this is really this isn't a good signal bar. We went on here high. Let's just show you that. So we were in one contract high. No, this is when we got out. What happened here? Took these 2 contracts. Oh yeah, so we got out at the top here. and then I got in high here. We should have taken this short. This was actually a really good signal bar short, but I wasn't playing supply and demand because I think I was just so long biased. And this always happens a lot of the times when I see what's happening. I should have just taken it short, put my stop over there. If it wasn't working, could have just gotten out at break even. But look at what we had and look at where we ended up. We tested this bottom over here, which was also in confluence with the extended trend line. Sorry, this extended trend line that we had plotted right from the overnight session, and price just kept on holding on this level. Now this level apparently is the mid. This level here is the mid price for May. So if we look at the let's do that. Let's look at the monthly chart. And if we look at that, the mid price is around about here. Oh, somewhere here. I'm not sure how he's done it, but I'll mark it there somewhere as a middle price for me, and I'm not sure how he did it, but that's what he did. But anyway, so we took that, we bought here one contract, and we started losing. We bought another one here, which was 1475, 1446, sorry, 4146. We bought one here, and at this point I was targeting my opening point here, but that was not that, it never ever came to my entry, which was here, right? So this is why I purchased this contract, came down, purchased. So I was actually losing at this point, but wasn't losing too much. I mean, I was down, but not down on the day. Then I purchased another one, was hoping for this to get all the way up to the opening. It didn't happen. Then purchased another one over here, just slightly below this one, just about here. Should have done it over here, but didn't have the conviction. And the point being that this is a trading range day, so price, every time price comes to this region, the bears are going to buy. Price comes here, the bears are going to buy, the bulls are going to buy. But the bulls are going to sell, the bulls are going to buy. Anyway, came back up, got to break even, did not want to exit, was targeting this point, never came. Went back down, purchased another one just a bit higher than this price, which did not make any sense because I should have purchased a bit lower. Lower. Go back here, got to break even again, didn't want to take it because I was stubborn and I wanted to make some profit. Came back down, and at this point I think I purchased the 5th contract and then got out at all 5 on this bar. And then notice we had a parabolic wedge. Not parabolic, we had a wedge here form. And then went short, got out on this bar because I saw this double bottom. And this short was actually in confluence with another supply region which had formed over here. And I wasn't really convinced at this point that this could even go lower. But if you think about it, we're in this range. And also, this range essentially is a trading range in a bear channel. So yeah, this was a bear channel trading range, but I was just not convinced. If I look on the 15-minute time frame, things were a lot clearer that was what was happening. We had a small range here, and then we broke out at the top. Now, I was seeing all this happening, but didn't really have the conviction to take the sell. So bought this at the close of this bar because I just felt okay with the range, but it was just the way we were breaking at the bottom. Bought this close, and then got out at the top of this bar somewhere just for one tick actually. Didn't really, how many contracts? One contract, yeah, just for one tick, which was just $1.25, and I wasn't very happy with myself with that. Broke the range, and then got back into the supply region, which was here. So we got back in here, took it short on this bar, and got out just over here. My initial target was just below, just that VWAP, but didn't have the conviction that we would get there. And got out, even though I had, made a bit of money there, just very tiny bit of money. And of course, since we've already used up some of the contracts coming down here, I didn't expect this one to go down. Also, this was the channel I was playing, so it just looked like we had pushed down, up, and then down again with that zone, and then gone back up again. Could not really figure out what exactly was going on. Today was not an easy day to trade because there's a lot of barbed wire price action. Wasn't very clear the direction, and usually that happens on a trading range day. So you have to just take bets at supports, at resistance in these instances. What I did like today was this trade here, where I bought at the top, went negative on me, and started buying at the bottom. On trading range days, you can actually do this quite well because or you can bet that it's going to go back up towards your entry point. It was quite interesting watching the price action of the bears and the bulls and what they wanted based on that. We had a few surprise bars, like this is a surprise bar, which whenever you have this, you can guarantee you're going to have another second leg up. I thought that would happen from here, but we had another surprise by the bears when this came down. Then we went back up, engulfing part of this bar, and then we slowly came back down, then went back up, and slowly, and it was just really slow, but very strange. Here we had a nice breakout, and I should have just taken this long at this point, or even here would have been good, but again we're at the top of the range, so I didn't have the conviction to take it long. But the breakout should have been one to take long. In fact, Al had a measured move target on this. So essentially, if you measure from here to the breakout, maybe the top here, this is where you're expecting price to go to. Hasn't reached there yet, but if you had gotten in over here, you'd be expecting to get out over there. But I noticed that when he plotted that and we were in this supply region, I decided to go short because I just feel like the supply regions are a lot stronger. And of course this went down, pulled back, and then went back up, and it was right to get out when I got out. Alright, so that was my trading day today. Tomorrow might also be another sideways day, and I think it will be really interesting to see how sideways we go, whether we now go sideways up as we did sideways down today. Alright, we'll try again tomorrow.